In the ongoing result season, the banking sector has attracted quite some attention. When Axis Bank announced results, the stock fell by about 7%, and it was not alone. Kotak Mahindra Bank had a similar fate. Now, of the 23 banks in the BSE 500 that have announced their results as of August 1st, 2025, just one has posted a positive 1-month return, with the median fall being 9% as against the BSE 500's 3.9%. So what is going on with the banking sector? What are the concerns weighing on banks? If you hold bank stocks in a portfolio, what should you do? Should you consider trimming your allocation, or can this be a bargain hunting opportunity? We will try to answer these questions in this video. Hello and welcome to ET Money's YouTube channel. In this video, we will take a look at the performance of banking sector, especially against the backdrop of RBI's rate cuts of 100 basis points since February 2025. We'll check key performance metrics, valuations, and management commentary. In short, we will give you a lowdown of the banking sector so that you can adjust your investment strategy accordingly. Now, this video belongs to our playlist on result updates. If you'd like to watch more such videos, you can check it out. The link is in the description. Okay, let's first understand why it's important to use the performance of banks in the light of RBI's recent rate cuts. Banks can earn money in a number of ways through lending, investments, fees, commissions, and so on. Of these, the lending function is central to their business. Via lending, banks earn the spread between the interest charged on loans and the interest paid on deposits. Now, when the interest rates fall, the interest earned by the banks rapidly reduces, and this shrinks the spread. A fall in interest rates also reduces the interest paid on new deposits, but since old deposits continue to earn a higher interest, it takes time for the deposits to be repriced. So, a bank's profitability is impacted in the short to medium term. If a bank finds cutting deposit rates difficult due to competition or due to trust deficit in the franchisee or to attract more deposits, its profitability can also be affected for a longer period. But every cloud has a silver lining, so does this one. Now, over to a medium and long term, a fall in interest rates can boost demands for loans, so banks also gain from higher loan growth. Now, the opposite of this happens when interest rates rise. When interest rates rise, the interest earned increases faster than the interest paid on deposits, so banking profits get a boost. Strong, trustworthy banks can continue to offer lower interest rates on the deposits and hence enjoy better spreads for a longer period of time. However, if higher interest rates discourage borrowing, they can impact loan growth and hence profitability. Now, what's noteworthy here is while interest rates affect banking profits, a lot also depends on the individual bank in question. And that's why some banks stand out from the rest during periods of interest rate shifts. Also, it's worthwhile to note that private banks tend to suffer first when rates fall in the economy. Now, that's because a large part of their loan book is linked to external benchmarks, such as the repo rate. So, any cut in interest rates is quickly reflected in their loans. On the other hand, PSU banks have a large portion of their loans linked to internal benchmarks. For such loans, the transmission of rate cuts is slower. Now, as of March 2025, 87% of loans of private banks were linked to an external benchmark, while for PSU banks, this number was much lower at 46%. Now, having understood the mechanics of rate revisions, let's now take a look at the performance of banks in BSE 500 that have announced their Q1 results. Now, as of this analysis, 23 private and public sector banks have announced their Q1 results. We will begin this analysis by looking at the net interest margins or NIMs. But before that, here's something important. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% per annum and there is no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app. And there is more. For the next 3 months, any withdrawal you do, you will get a special rate of 9.99% per annum. So go for it now. Alright, NIM or net interest margin is an important profitability metric for banks. It tells us what income a bank makes from its lending activities as a percentage of its average interest earning assets. The higher the NIM, the more efficient a bank is. Now, in the case of private banks, NIMs have fallen in each of the last 4 quarters year on year. At 31 basis points, the fall is the steepest in the latest quarter. Now look at individual banks, show that all banks except two, Yes Bank and City Union Bank, have shown a fall in NIM in quarter 1. ICICI Bank has done reasonably well by limiting the fall to just 2 basis points. Now some banks like Bandhan, RBL and IndusInd have also been suffering from their own problems, so they have witnessed a sharper contraction in NIMs. Now what's the situation with public sector banks? Their NIMs have also contracted year on year in last 2 quarters after a small uptake in quarter 3 FY25. Among individual banks, Bank of Maharashtra and Indian Overseas Bank have done a good job at arresting the fall. Bank of India, Central Bank and PNB have suffered the worst contraction in NIMs. Okay, let's next check the income and profit growth and assess if the contraction in NIMs has also affected banks' profitability. A fall in IMs can erode a bank's profit, but banks don't rely only on interest income. As we discussed a little while ago, banks have sources of income other than interest income, such as investment income from fees and commissions, and so on. Now, these additional sources of income can support a bank's profitability when its core income falters. So, let's check how the various banks have fared on their total income and net profits. In Q1, private banks' median income grew by 9.1% and profit by 4.2% year on year, thus arresting the declining trend in both. Positive growth in spite of a fall in NIM suggests that banks have done quite well with their other income streams. Among individual private banks, those that have posted a rise in both income and profit in Q1 include City Union Bank, HDFC Bank, ICICI Bank, etc. Only IndusInd Bank has disappointed on both fronts, with its income falling by about 4% and profit by about a massive 68% year on year. As far as PSU banks are concerned, while they have done well on the income front, their profit growth has fallen as compared to the last 3 quarters. But notably, PSU banks' profit growth numbers are much higher than those of private banks. Now, a range of factors including improving asset quality, recoveries, loan growth, a low base have all contributed to better growth numbers by PSU banks. Now, all PSU banks have reported growth in their income and profit in quarter 1 except PNB. PNB's net profit was impacted due to a miscellaneous tax expense. Okay, let's next take a look at the NPAs or non-performing assets. But before that, do subscribe to the channel if you haven't done yet. And don't forget to press the bell icon so you never miss a video from us. NPA or non-performing assets are bad loans where neither interest nor principal has been paid for over 90 days. In short, NPAs don't generate any income for banks and the amount lent may also not come back. Naturally, a high level of NPAs can affect a bank's profitability and stability. Hence, it is important to track NPAs while analyzing bank performance. Now, a key NPA-related metric is gross NPAs, which is derived by dividing the value of NPAs by the total loans given by the bank. Take a look at the NPA trends of private banks. After falling for 3 quarters, the median NPAs have risen slightly in Q1. This suggests that private banks' books have faced pressure in Q1, which has also affected their profitability. Banks that have been hit most in Q1 include IndusInd Bank and Bandhan Bank, with their NPAs rising in triple and double basis points. IDBI Bank, City Union Bank, ICICI Bank, J&K Bank and Yes Bank have done a good job at lowering their NPAs. Now for public sector banks, the picture is rather great. In quarter 1 as well, like the last 3 quarters, they have been successful in lowering their NPAs. Now, as we saw in the case of their profitability picture, falling NPAs are also a key reason for their soaring profits. Quite remarkably, all PSU banks that we have included in this analysis reported a decline in NPAs, with Bank of India, Canara Bank and Central Bank leading the charge. But at this juncture, it's also important to note that PSU banks had been grappling with higher NPAs than their private peers, which they have been trying to bring down now. At 2.92%, The current median gross NPA of the PSU banks considered in this analysis is still higher than private banks' 2.38%. So, while a fall in NPAs is good news, one should not rule out the higher NPAs that PSU banks have historically grappled with. Okay, let's summarize the performance picture of banks in the concluding section of this video and see how you should approach this space. The table on your screen summarizes the key findings of this analysis. On the net interest margin front, both private banks and PSU banks are suffering. As we discussed, rate cuts by RBI have contributed to this decline. Both private and PSU banks have arrested the fall in their income growth in Q1, and that's good. Private banks have succeeded in arresting the slide in their profit growth too. PSU banks have yet to do that, but their profit growth is in the 20s, so it is still quite high. Finally, as far as NPA picture is concerned, private banks have reported a slight rise in Q1, but PSU banks have been successful in reducing their NPAs over the quarters. So, the overall picture isn't so bad except for the dipping margins. Now, to understand when this problem will resolve, we looked into the investor con calls of some top private and PSU banks. Now, banks believe that margin recovery should start happening from Q2 or Q3 as deposits get repriced and the advantages of CRR cuts kick in. However, if there are more rate cuts in the future, the recovery may get pushed further into the future. Now, amid such circumstances, banks that have high proportion of CASA deposits tend to recover faster. CASA stands for current account savings accounts. These deposits are low-cost deposits for banks, and a higher amount of such deposits aid margin. The CASA ratio is the current account and savings account deposits for bank expressed as a percentage of their total deposits. Among private banks, IDFC Bank, J&K Bank, IDA Bank lead the pack in terms of the CASA ratio. Bank of Maharashtra and Central Bank and Indian Overseas Banks are the top among PSU banks. Finally, from the investment standpoint, it is also worthwhile to take a look at the current valuation of the banks covered in this analysis versus their historical medians. Bandhan Bank, IndusInd Bank, Kotak Bank, Axis Bank, and IDFC First Bank are the cheapest banks currently with respect to their historical valuations. At the index level, private banks are quite cheap now as compared to their PSU counterparts. But do know that we are not recommending you to invest in these stocks or indices. Neither should you invest in any company based on just valuations. Valuation should be seen in conjunction with the overall fundamentals and hence research a company thoroughly before investing in this. The idea was to provide you with a status check of the banking sector. You can combine this analysis with your own research to select promising banks. And with this, I've come to this end of this video. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.